Greetings to all. This is Neel Parekh, a technical research associate at GEPL Capitals. Welcome you to this weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current market chart structure, as well as we'll discuss the two stocks which has a high potential to outperform in the upcoming series. So without any further ado, let's start with the video.
Query and clarification that option documentation and or voting. Report that.
So this is the weekly scale of Nifty 50. If we look at after the three consecutive days of higher highs and higher lows pattern, index on the current week has taken a breather near to its 26-week exponential moving average, and it has slipped below its 24,000 level as well and settled near to level of 23,900. If we observed on the daily scale, then Nifty settled near to its 20-day exponential moving average. So if we take the retracement from the April low, which is at 22,182, till the high which has been recently created, which is a minor top Nifty has created on daily scale, which is at 24,601 level. So 50% retracement has been coming near to its 23,400, and 38.20% retracement is near to its 23,700 level. So these are the key golden support ratio for support zone for the Nifty index at a Predator scale. The momentum indicators has also turned negative on the daily scale after the today's trading session fall of 300 points. The lower lows and lower highs pattern has been formulated on the daily scale that further denotes the weather has been getting cooled off. The weekly scale has been taken on the higher level. If we look at the breadth index, has been indicating the 94% of the stocks is being above trading is 50-day exponential average. That denotes the short-term breadth has been at overbought levels. So short-term trend has been overstretched. So this has been indicating that from the level of 24,600 to the level of 23,400 level is a zone of accumulation level. So quality mid cap and large cap stocks should be accumulated at these levels. So in further slides of the video, we'll discuss the two stocks which has a high potential to outperform. So if we look at the levels perspective at a lower scale, 24,000, 23,500, 23,700 would provide an important support zone. And at a higher scale, the breakout above the level of 24,300 could resume a primary upward trend which has been started from the April bottom and reach toward the level of upward target of 24,800 and 25,300 mark. Moving to the Bank Nifty index, the Bank Nifty index on the weekly scale, similar price action has been witnessed after the three consecutive days of high and higher lows pattern. The current week, it has taken a breather near to its 57,000 psychological mark. If you look at the derivative perspective on this particular chart, the 57,000 strike has been getting a highest call open interest writing level. So that defines the breakout above the level of 57,000. Short covering rally could push Bank Nifty toward the level of 58,500 to 59,000 level as well. But till then, Bank Nifty has been sustaining below the level of 57,000. The near-term structure seems to be neutral to weaker side. On the daily scale of Bank Nifty, if we look at, index has created a minor top near to its 57,400 level, and it's been hovering near to its 50-day exponential average as well as the 20-day exponential average. So currently, the near-term structure seems to be on a neutral to weaker end. Levels perspective, at a lower scale, 54,500 would provide a strong cushion for the Bank Nifty index, and higher scale, 57,000 levels. Stock to watch out in this market consolidation. First one would be Torrent Power. On the weekly scale of Torrent Power, if we look at, the consistent pattern of high top, high bottom formation has been formulated. And on the current week, the stock has witnessed the breakout of its triangular pattern, and the 1 year consolidation phase has been taken out on the current week with a volume participation coming up more than 20-week exponential average has been surpassed on the current week itself. So the higher scale, the 1950 would be the target, 1950 would be the upper side target, and at a lower scale, 1595 would act as a stop loss area for the Torrent Power Index. Second stock to watch out is Steel Authority of India, which is SAIL. So if you look at the higher time frame of the structure, the monthly scale represents the breakout of its multi-year consolidation pattern, which has been marked from its 2007. So 2007 swing top has been taken out on the current month itself, which is in April month, with a Weekly scale indicating a high top, high bottom formation has been formulated since the bottom of Jan 2025. The stock has been in the prolonged upward trend. The daily scale represents the bullish mean revision from its key short-term moving averages. That represents the multi-time frame pattern has been confirmed. At a higher scale, the upper target for the Sale Authority of India would be 195. At a lower scale, we have to maintain the SL at the level of 167 for the effective risk management. So these are the two stocks. We can focus on the upcoming series for the high potential to outperform in the series level. So Nifty and Bank Nifty view has been currently short-term neutral to weaker end, and our Sale Authority of India and Torrent Power stocks should be in focus for the upcoming series. Thank you.
Okay.